Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's August 14th. I'm Frank Curzio, it's the Wall Street Podcast. We're ready to headlines and tell you what's really moving these markets. So the one and only Daniel Creech joining me today. Hey, what's going on, man? How's it going?
Everything's going good, Frank. Got my haircut. I'm taking a page out of your book. I'm hitting the road, manana.
Are you again?
Yeah, oh, again, cool. Listen to that. Yes, I'm going up to the great state of Ohio. I'm going to go talk to J.D. Vance's and his team from Ohio. Going to visit my family. That's where I'm from, of course. So excited about that, yes.
Yeah, that's cool. And visiting what specifically?
I have a new niece.
That's awesome.
Got to go get to play the new uncle role, so.
That's cool.
I'm very good at that role.
It's always be uncle, grandparents, the best thing, right?
Yeah.
Because you always get to give the kids back.
I have an 8-year-old nephew and a 6-year-old niece and now this newborn. So it's hilarious because as soon as she gets upset, it's like, all right, pass that one off. And then I can take the older kids and we can go play and have fun. So
yeah, they're going to have fun.
Yeah, it's great.
Yeah. And guys, if you don't know Daniel's like 7 feet tall. So even when my kids, when they were young, they're like, Daniel's gigantic. How does he fit through the doorway? How tall are you again?
About 6'6". The best thing was you were out in public and one of your daughters was like, is that guy big as Daniel, you think? Like,
yeah.
Everything was compared to me.
It's like, Daniel's so big. Is he bigger than Daniel? Yeah. So, they love you. But no, that's great stuff. That's great stuff. It's good. It's really cool.
Yeah, so I'm taking Delta, so I'll report back to you and see if that whole CrowdStrike
Delta's
fiasco.
Been a disaster.
I heard it is too, but they should be over it. They might be lying through their teeth, but they say they're over it and everything's back to normal. But I talked to a guy that flew last week on Delta. Wasn't a good situation.
Yeah.
We'll see.
UA as well. In Aruba, I had someone go to Aruba. They said it was a freaking nightmare. It was like, a couple of days before they got things up and running. There was a strike over there. But yeah, the airlines, it doesn't seem like they're as busy as they were. And I understand Delta was going through a whole bunch of stuff with CrowdStrike and everything, getting the systems back up and running. But it's just, it's interesting to see that I don't think demand is that strong, and yet you're still seeing delays. And my wife just came back from New York, same thing. Delays. Her flight home was good, but they had weather delays. But even on the way there, they had to go a day later. It's just, it's like normal now. It's like, okay, you're definitely going to get delayed. It's crazy.
But I did wait for a good weekend. Frank, everything is fixed. The recent economic data, markets are back in rally mode. So that's the only reason I'm leaving is because I fixed everything. And now we can
Jeremy Siegel, right? 75, right? The carry trader on 75 basis cut today. We need it today. With his glasses on, it's funny. And he's pretty cool. I kind of like the guy. And then he's like, and another one at the September right away. And then everything's okay now. Are they going to hike? Are they going to hike now? I don't know. 2 weeks gone by. They're not hiking. I'm just kidding.
Yeah.
But, and they're definitely not hiking today, because what do we get? We saw a CPI number come out, right? Which is a big deal, right? Increased, inflation still increasing, which is insane since it's been up 30% since COVID, right? Over 4 years, and it's still increasing. However, when you look deeper into the numbers, that's where you see that inflation is clearly slowing. It was going to slow, just a matter of time. It just wasn't transitory as the Fed and Powell originally thought. But, just for the numbers, which kind of mean nothing to anyone, but I will go over them really quick. It's the increase 0.2% in July. To 2.9%. That was lower than 3% expected. The core came in at 0.2%, also a good number. But when you look under the hood, what we do is there was a massive increase in shelter costs, right? So rentals. So that was responsible for 90% of the gain. And we're seeing the shelter part starting to roll over finally, right? Where it's rentals. And, even in my phone store, I had a couple employees, actually, their rent went up, and they're like, look, we just can't afford it. And they actually were like, we're going to take off. I had a little bit of a crisis at my phone store. Now I have, another employee there that's working full time. It's great. And I hired him. But the point is that they were looking for rentals, and they're still incredibly, incredibly high. But we are seeing the housing market really pull back now. I mean, applications down 8% year over year, even though interest rates have come down. You're starting to see prices fall in many of the markets. A lot of that has to do with your area of the market that you have experience in, is with the insurance. Insurance is freaking insane.
It's unbelievable.
It is insane right now. I mean, there's people that are leaving Florida because the insurance is so freaking high, and that they can't even get house insurance, not to mention auto insurance, which I just dealt with because I just got my daughter. We'll talk about that a little bit later. A new car, not a new car, a used car. Because she's getting a license in a week from now. So now she can drive to school, which is cool. But holy cow. I mean, the insurance for her is more than 2 cars for me and my wife. And we were getting quoted. We went to 4 different people. They're like, well, this is what it's going to be. And then when they went through the checks and everything, it was $1,000 higher from what they said. $1,000 higher. We weren't talking about, we're talking about $6,000, $7,000 the insurance is for my daughter, just for her, for the year. I'm like, you got to be kidding me. This is bullshit. I mean, it's basically like 30% of the freaking 40% of the car. I'm like, it's nuts. It's absolutely nuts. So just the insurance premiums, and that's going to happen. I think the airlines figured out and said, look, we're a necessity and people need us, so we have pricing power. Dang, maybe you'd be better off telling me, why is insurance going up so much every single place? Are they paying more for claims? But it's across the board where we see healthcare is a bunch of nonsense now. It's absolutely nonsense. We switched healthcare providers. We tried to lower our prices for our company. And when we did, for the first time ever, they required that we get information from all of our employees, which is a pain in the ass, right? Makes me look like an idiot. And asking like a lot of shit, like what were your prescriptions that you took, the dosage over the last 4 years? It's a lot, it took a while to fill out the forms. When they got the forms, they refused us. I said, what was that about?
I was probably to blame for that one because of my cigar habit.
But it's just the crisis is insurance right now. I don't think it's being talked about enough because it's impacting the housing market. It's impacting people tremendously. And holy cow, I mean, going through it right now, it's pretty insane. Again, if you guys have any stories, let us know. FrankCurzioResearch.com, DanCurzioResearch.com. But the stories I'm hearing, and me, even from real life examples, it's just been a nightmare where the prices aren't increasing by like 5%, 10%. They're like fucking doubling right now. And it's insane. It really is insane.
Yeah. And there is a couple factors behind that. One, during the COVID lockdowns and such, some insurance companies did take a hit on the replacing factor. Because what'd you have? You had a crash in used in car prices and then a spike because everybody wanted them, deals going everywhere. So there was some insurance losses on claims there. However, what I think is very clear is you have the government with its greedy little hands in the pot. So you have lack of competition across state lines and different things. I had the nicest, as far as insurance agents go, and I know most people look at it as a necessary evil, and I get that. Isn't it great to sell a product that you legally have to have? That's kind of wonderful. Guy out in Arizona was fantastic, okay? He said, bummer, you're moving to Florida. I can't insure you there. We don't have enough business and blah, blah, blah. And he's like, plus some other rules and regulations. So that's fine. I go to somebody else. Prices get jacked up. Why? Because in Florida, you're allowed to go to the government. Well, that's how you negotiate, raise prices and such over that. But then you get to blame things like global warming and take on all these risks. But forget the fact that everybody still lives on the coast that has rich and, is the wisest people. But that's just a good excuse to say, well, crazy weather and all these patterns. It's absolutely ridiculous. Never challenge worse. The idea that you have to pay that for your daughter, I get it. She's young. She's 16. That sucks, but that's ridiculous. But a guy like me, I've complained about this before. Knock on wood, perfect driving record. Don't drive a very nice, drive a reliable truck. And I'm paying around 10 to 15% of the total cost of the vehicle per year. That's absolutely insulting that you pay that high of a premium on your percentage on a depreciating asset. So yeah, there's no insight. I look ridiculous for selling Progressive insurance.
Is it Progressive?
That's one of the best ones. But
so this is what we call Progressive, and they had the best price. This is what happened yesterday. So my wife's on the phone. She's in the car with me, and I'm listening. I'm trying not to get involved. So they quote her for my daughter. And then they go and look and say, okay, let me check your license, any tickets or whatever. I said, no, I don't think we had any tickets the last 5 years. And I had a ticket like 4 years ago. 4 years ago.
Frank, that's a liar in their book. Boy,
right?
You're gonna get,
so I'm like, totally
penalized.
forgot about it, right? Obviously, it's easy to track, right? It's something you shouldn't lie. But, I thought it was longer than 5 years. That's a long time. So they're like, oh, your part of the insurance went up $800. I get that. That's fine. And all of a sudden for my daughter, they raised hers by $350. I said, well, why'd you raise hers by $350? So I talked to one lady. She's like, I don't know. They put us on hold. We go to another lady. I said, could you bring this up? So now I get involved because I'm pissed. And I say, all right, so why is she going up when nothing changed with her? So we get on with the next lady, right? And she goes, okay, let me pull it up. She pulls it up. It's $100 more now for the policy. Hers goes up $445. I said, why? I said, first of all, it went up to $345 for no reason. Could you tell me? She's like, well, we can't tell you. I said, well, why did it just go up $100 on this transfer? She's like, well, I don't know. I could transfer. I said, don't fucking transfer me again. It's going to go up more.
Exactly.
I said, you're transferring a caller that's going up more? I said, nothing is. And you know what they told me? They said, we don't know. We just look at the computer when we put it. I said,
it's
really?
The algorithm, Frank. It's just
the algorithm changed for her. It had nothing to do with her, right? Because she's getting a license. This was us. And I understand we got raised. I said, the fact that you can't tell me that is absolutely ridiculous. Of what? They're like, we don't know. I was like, oh, so you don't know. So, how about you charge me lower then? You don't know? I mean, really? But I'm sure there's a lot of stories
like
out
the
there.
Breakfast Club where the president, the principal's like, you want another one? All right, more detention. You want a higher premium? More. Higher. $100. $100.
Just don't transfer me anymore. Don't transfer anymore.
I can't afford it.
But holy cow. But other than that, you see insurance, stuff like that, and housing, we're looking at even with housing, you're seeing that the mortgage refinancing, we'll get that into a minute. Obviously that's up, right? People tapping equity in their homes, but
because rates have come down a little bit in anticipation of the Fed cutting.
Yes.
You have seen that dip.
And now with this positive PPI and also the positive PPI yesterday and now the CPI today, but mortgage rates are now lower, right? But you have to realize, even if you're looking at where housing is, it's still down 8% when it comes to the applications. And why is that? Because even though rates are down, they're 6.5%, which is, I think they were 7.5% not too long ago. But remember, if you're moving to sideways, so say the same house, say if you have whatever, it's simple math, you have $1 million house and you want to move to $1 million house in someplace else, you're going to sell your house at less than a 4.5% mortgage likely. And now you're going to go to a 6.5%. It's a much, much higher payment. And then you throw in the insurance payments. You're talking about a much, much higher payment. And that's really starting to impact where that's coming down. We're seeing energy prices coming down. You saw cereal bakeries, the category down 5%. Dairy fell. A lot of categories have fallen. And I got to tell you, Daniel, core inflation year over year is about to come down tremendously in the next 2 months. And I want to tell you guys why. This is important to understand because this is about numbers. Okay. And I try to make this as interesting as possible, but year over year numbers are important when it comes to companies. For example, Intel is horrible. They're crashing. They lowered their estimates. Next year, this time, they're going to have a comparison to this year that is much, much lower. So you're going to see sales are going to be down for 7-8 months in a row compared to the previous year, right? Because they lowered their sales tremendously and they're going to be comparable to last year. It's a big deal in Wall Street terms, and this is what moves stocks. Now, year over year, when we get to next August, for Intel, they're going to have it's called a very easy comparison. And now you're going to look and you're going to say, well, Intel's growing again. They're growing sales by 8%, right? They're growing it off of a low base. It's a big deal because that moves stocks. When it comes to the inflation number, I want to bring this up if you guys are watching on YouTube. Okay, so this is a consumer price index, and this is broken down by month. This is stupid stuff that I look at. Okay, so when you're looking at this data, and let me see if I can make it a little bit bigger. I'm going to go over it in case most of you listen to this through iTunes and you're not watching. So this is Bureau of Labor Statistics, and it's broken down by month, right? So when you're looking at this month right now that was reported was last month, right? So August 14th, CPI is for the full month of July. Now, when you look at the year-over-year comparisons, last year, if you're looking at June and July, those are the two lowest months of inflation that we saw since 2021, last year. Okay, it was 3%, 3.2%. To put in that perspective, to start 2023, inflation was growing 6.4%, 6%, 5%. Those are two easy numbers. And then they started going up again. My point is that the comparison to this month, it was flat year over year from June. So last June, it was 3% inflation growing, and this June is 3%. So now it's flat. That's what you want to see. Last year was 3.2%, one of the lowest numbers in 2023. And then now this year, this month for July is 2.9%. The next 2 months are extremely high. It's 3.7% and 3.7%. What does that mean? We're going to get a two handle. It could be 2.9, 2.8, 2.7. It's going to show that inflation is coming down tremendously. The headlines are going to show that. And we're going to see that coming down. Now, the next month, why is this a big deal? Because when we report next month's inflation, which is going to be around September, say 14th, 15th, 13th, around
which is
there,
close to the next Fed meeting.
Right? It's going to be just before the next Fed meeting. And we're going to get a number that's going to be so good no matter what, because last year's number was so high year over year that you talked about expectations offline of how much, what is the Fed rate cut for 25 basis point cut is what, 100%? What's 50% basis cut next quarter?
September, the 25 basis point is 100%. And then there is a 50 basis point, the expectations for a 50 basis point cut in September is now 54%.
Okay.
That's up from 50. But then 25 again in 25, 100% for November and December at 25 basis points each.
Okay.
That's
so
75 baked in, 100%.
Yeah. So
that's crazy.
So what was it? 50% chance of a 50% basis cut?
A 54% chance of a 50 basis point cut in September. But the 25 is baked in 100.
Yes.
And then 25, is 100% baked in for both November and December.
Yeah. So based on the data that I just gave you, even though if it might have been tough to follow, because the number is going to be much, much lower than the year over year, right? It's going to be 3.7. We'll probably get a point at 2.9, 2.8 handle. And that's going to happen right before the Fed meeting. And the Fed meeting takes place on the 17th. This is going to happen just before. It's going to give them the green light where I say there's a 90% chance they're going to cut by 50 basis points. It's a big deal. That moves the markets, okay? Because that's not really, it's 50% chance, 55, 54%, whatever it is. To me, I think it's more 90% that they're going to cut by 50 basis points because they're going to get such a favorable report year over year, there's going to be headlines everywhere how much inflation has come down. Again, you're going to get that report next month and the month after, but it's going to happen right before September Fed meeting. And I don't know if that's going to be great for stocks or not. People think when they cut, that's automatically great. Careful what you wish for, because the Fed cuts. This is why listen, we had wild inflation for how long, Daniel? I mean, since pretty much 2022 into 2023 and into 2024, right? And what happened? Equities surged from basically November 2022 through 2023. Inflation was super freaking high. I mean, I could bring it up again. I mean, so inflation was super high. Right, I mean, everybody wants inflation to come down.
We did have a washout a little bit in 2022. You're right.
But so right before 2022, but right when the market started taking off, we had inflation rate. This is late 2022 in November, 7.1%, 6.5% in December. Then it was 6. This 2023. We were above 4% through January, February, March, April, May. So I mean, very high prints right to 2023 and into 2024. Still high inflation. What happened with stocks? In case you don't remember, stocks hit all-time highs. They ramped higher while inflation was still very, very high. Now, what do we have? And we're looking at this chart here again. Again, look at 2023. Jesus, just look at it. Even 2022, man, 7, 8, 9%. But now, what do we have? We have a Fed where we're going to see inflation coming down tremendously, and they're cutting rates. And right away, people think, okay, that's going to be great for markets. And listen, we have rates high, inflation high, and the market took off because the economy is growing faster. You have pricing power. Everybody has money. The Fed's trying to pull back. Now the Fed cuts because they want to try to stimulate the economy. They think that, they see a slowdown coming, and it's not necessarily the best thing for equities when you see that. And it means we're going to see a slowdown, which we're seeing in home prices. We're seeing a slowdown in so many different areas. We've seen almost every single company during this earnings season. I think it's a little more than 90% reported now. S&P 500. That doesn't mean everybody reported. We have a lot of small caps that are going to report over the next 2 weeks and mid caps. But I mean, we're talking about tons of companies saying that we're seeing a slowdown in consumer sentiment. And even with Home Depot, right, just came out and said the same thing. Yeah. We saw McDonald's. We see everyone who's come out and said it, right? So we're seeing this slowdown. Be careful what you wish for, because, while you do have that refinancing activity is great where, the 10 years now, 3.8, 3 weeks ago is 4.3. So we're seeing, rates come down tremendously, especially for mortgages. We saw mortgage refinancing surge 35%. Up 108% year over year, which is huge. But, again, we looked at a rate that was 7.6% for the mortgage rates now, and that was a couple months ago, and it's 6.5%. But we're going to see the economy slow down. It's not necessarily like the greatest thing ever when we see these big rate cuts, but I'm telling you, it's going to be 50 basis points, and I'd give it a 90% chance.
That's wild. We've been right on the melt up till the rate cut. Markets got scared over the Japanese yen carry trade. We've basically earned all that back. If you look at a chart, S&P is give or take within 5% of its all-time highs. Yet, like you said, Frank, I mean, the consumer is clearly hurting. We've seen it from Airbnb, Nike, Walmart, Target, like you said, cutting prices, which I actually think that'll be interesting to watch with the back-to-school trade, because I have seen more commercials and marketing about lowering prices across different consumer wants. Now, Airbnb warned of forward-looking travel, less bookings. All right. We'll see about the airlines. Home Depot put up numbers that were not very good. They lowered comps, okay, same stores, just as you were talking with the easy comps coming up on the inflation data. They lowered their comps going forward. They cut their earnings per share, and they said, hey, consumers are pulling back on bigger ticket items like remodeling, kitchens, and stuff like that. Now, the trend isn't dead, don't get me wrong, but when you put everything together, the consumer is clearly pulling back and or weakening. And what's wild here is Home Depot really didn't move a whole lot on that news. But if consumers are pulling back on everything, Frank, the only thing that stood out, they said, they're cutting back on remodeling and kitchens and things like that, but they're seeing strong performance in outdoor power equipment, outdoor power tools. So I don't know what people are doing outside, but evidently it's not enough to get them back in the store and raise their comps. But when you see Home Depot and Lowe's that have been a great success benefactor from the COVID and the indoor remodeling and stuff, when they start to warn, in addition with the travel trade starting to warn, in addition with your lower, I mean, we've even seen Louis Vuitton and the high-end market.
We've seen high-end market warn too,
We've seen them warn a little bit. We've seen the low-end, your favorite store, Five Below, that sells nothing of importance that you say.
Yeah. Anything that you buy in that store is probably going to be broken in like three months.
Listen, I'm not saying, but it's clear consumers are hurting because per the New York Fed, and I spoke about this on my Curzio Research Advisory monthly newsletter a little bit, Frank, when you combine auto debt and credit card debt, it's over $2.7 trillion. Okay. The amount in delinquency, 90 days late, which I understand things happen. You can get behind a couple of weeks. When you're 90 days behind payments on cars and or credit cards, what are you worried about? You're worried about your car not being there eventually. You're going to have
That's why people always say, like, even the subprime market in cars and, it's going to hit the market. It's over $1 trillion and it's going to, did not, because actually they can't take your house from you. There's laws that you could actually be in a house and not pay for like a year. And there's almost nothing that they could do. There's almost nothing they could do to kick you out unless they grab you and throw you out of the house and then they're going to sue you. But it's much different for a house than it is for a car, because they'll just come and they'll take it from you. So, and then they have the asset and they could sell it someplace else. So it's definitely different. But yeah, you bring up a good point. I mean, you're worried about losing your car.
Well, you start, and again, this doesn't mean that things are going to fall apart tomorrow, but when you start getting to the amount of that debt, roughly 10% of all that. So let's just round and say $270 billion. That's a significant amount. There's less than 50 companies that have market caps over that. And that's what's 90 days late on credit card and auto debt. Now, you have credit card rates at near or at all-time highs. Consumers are hurting, and you're going to have to pull back. So it's going to be very selective going forward. They can continue to push water uphill. Again, deficits matter. Deficits, the pumping of money into the economy matters. But I'm happy with our call on melt up to the rate cut. But once they start cutting, expect a pullback, and then be surprised and throw eggs at me and email me, Daniel@CurzioResearch.com for saying to lighten up. But you want to just press that metal until September when they start cutting, and then reevaluate and make sure you know what you own. So when things just dip all of a sudden, you don't panic and sell like a lot of people did 2 weeks ago.
Yeah. And before we go to this, I just want to say things. I'm going to say I wouldn't sell yet because the election's coming and you're going to see a lot of things. We'll go over some of those catalysts. But I just looked at Home Depot when you said it. I don't know who the hell would buy Home Depot here. I mean, Home Depot, listen to me. Home Depot, I'm putting this up. It's down 10% off like its all-time highs. Less than 10% off its all-time highs right now. So you're looking at Home Depot, and one thing you'll look at is still have, and I'm doing this on a free site, which is CNBC. This way everybody can follow along. If you look at the PE, TTM means trailing 12 months, and the forward PE is the next 12 months. I focus more on the next 12 months. It's nice to look the next 6 months. Last 12 months, really, I mean, you look at NVIDIA and where it is today, just from 12 months ago, and the amount of revenue. Look, you want to see the future. That's what companies trade on. But when you see the PE at the same, it's 23 and 23, that means that they're not growing earnings. So you're looking at a company that's trading, where's S&P 500 trading? It's trading about 20 times forward earnings. So this is trading at a market premium. It's a premium to the market, a decent premium to the market, whatever it's 15% premium to the market, yet I could see if you earn that premium if you're growing earnings or sales faster than the overall market, which they're not. They're not growing earnings faster. And you're looking at this company saying, okay, in the home industry where you're not going to see, it's tough to refinance right now. You're seeing some people refinance who still have much higher rates. Maybe you're going to get those HELOCs, which are on fire. HELOCs are on fire because it's a way to extract money. And if you have credit card debt at 22% to 25%, even if these assholes are charging you 30%, because that's what they do, which is insane. If they're charging you that much, I mean, you could probably take out home equity loan. Don't quote me on this. I didn't look at the rates, but maybe 10, 11%, pay off your credit card debt. That makes sense with a HELOC, right? And again, they used to be really bad because they were giving HELOCs away to people. All you had to do is show a library card. And I own this house and here's proof of my library card. And they gave you loans and everybody got in trouble. Now you're looking at, and this is one of the things I want to focus on because, Home Depot here, I just don't get. I don't see the growth. I don't know why you pay a premium for it. If you're looking at the dividend is 2.5%. Why would you buy the stock and say, well, they pay a 2.5% dividend? You could put your money right now in Interactive Brokers. I think you might need a balance of $100,000. They're going to pay you 3.5% to 4% for free. Right? For free. That's the interest rate. So you're not buying Home Depot for a dividend. I'd rather not take the risk of a stock trading at a 15, 20% premium to the market in the wrong industry right now, which is housing, which is not doing that good. They're saying they're warning that there's a slowdown. I'd rather take that money if you're looking for the dividend purposes and put it in some place that's risk-free where you could earn that. Right? So when I look at Home Depot, but with that said, when I look at the statistics here, Daniel's right. I mean, we talked about this. So if you look in the past, when we see the tightening begin, that's when we see markets really pull back. That's when we see, it's a sign that things are slowing down. It's usually a sign we could be heading for a recession, but yet we're supposed to be in a recession for the last 3 years with inverted yield curve and all this shit. None of that mattered because you're throwing trillions into the market, why every economist has no idea what's going on and why every economist says the economy is really strong. And there was a report from CNBC saying, I think it's 60% of Americans believe we're in a recession and we're not. And they're confused. It's the sentiment. It's how they feel. I mean, F the recession word. I mean, we don't have to be, we talked about this last week where it doesn't have to be, negative GDP growth of 0.1% and 0.1%. Doesn't mean that everything is great if we saw, 0.1% growth, right? Because that means it's not inflation, but you're feeling it, you're seeing it, you're getting squeezed, your costs are up tremendously, wages are not growing as fast. But with that said, there's a lot of bullish notes before you go and sell this market. And I think it's going to have, these bullish things are going to exist at least through this year. You're looking at $300,000. I'll say it again, $300,000 average homeowner has in equity in their homes. That total home equity, nobody wants to talk about. We talk about debt all the time. It's over $30 trillion of equity. Home prices could come down 10% from here. That's fine. It's still $27 trillion in equity. It was $15 trillion in 2017, which is insane. You're looking at credit cards, right? 22%. You can refinance through HELOCs, which are on fire. If you're looking at it, before these last 2 weeks, it was 8 straight weeks of outflows. Goldman Sachs report on this. They did good research. Money market funds, from money market funds alone, over $6 trillion at all-time highs a week and a half ago. So, and that's cash that was pushed on the sidelines that's still waiting to be deployed, again, after 8 straight weeks. And it's starting to get deployed, and that's why you saw the market really, start going back up again. $6 trillion.
$6 trillion.
You're looking at $2.5 trillion just on the balance sheets now. Forget about the money market funds, but $2.5 trillion on some of these S&P 500 companies where the window to open that it was closed. So buybacks. So a lot of these companies are going to announce a massive amount of buybacks. And when you're seeing the buyback window is closed. It was being closed because it's closed for again, 2.5 weeks ago, I think it was 15% of companies had the ability to announce buybacks, right?
So now, it was closed during the earnings.
It was closed during the earnings. It was closed for a good 5-6 weeks, I think it is. I think it's like 5-6 weeks that it's closed. Now 90% of those companies, again, $2.5 trillion, and a lot of that is from the top 10 companies, and I get it, but those are companies S&P 500. Now you're looking at companies that could announce buybacks. And if your company comes out, even if a Home Depot, like I said, I don't know why we buy Home Depot. If Home Depot comes out and says, hey, we're buying back 10% of the float, that stock's going higher, right? So that could be a catalyst that could blow up in your face. The carry trade, no longer an issue. Okay. I know JP Morgan says, well, it's not totally unwound. We know about it. Just like commercial real estate. When you know about it, you see the damage, you understand what's coming. Nobody understood that was coming. They didn't know the Bank of Japan was just going to go crazy and say, they talked about it. They talked about it for a long time. Okay, we're going to raise rates, but they never said they're going to stop bond buying and everything. And that caught everyone by surprise. That's why you saw, that anomaly of a massive sell-off and deleveraging. And now, now that we know it's there and it's prepared, I'm not worried about it. And plus you have, what did the Bank of Japan, BOJ do? Did you hear that? They actually walk back their hawkish tightening stance. They're like, okay,
they're not going to hike while we have unstable markets.
Yeah, so they're not going to do that again.
Hate speech. You can define that any way you want. That's why you use those silly words.
They don't want that to happen again. Regardless if it resulted in the market crashing and then coming back, they don't want something like that to happen again. So they walk that back, which is a positive. So if you like the carry trade and JP Morgan's reporting not all of it's unwound, you see it coming. They know what to do. And again, you don't have to worry about things that you can see. It's the things that you can't see. That's why the credit crisis happened and leveraging and crazy stuff like that. Also, it's an election year.
Ooh.
I mean, if I were you and I was young, I wouldn't be paying off my credit cards because who knows? That could be next. And they're going to say, hey, we're going to eliminate all the credit card debt for everyone that's under 30. Who the hell knows? Or they just handing out money. I mean, seriously, I'm going to take out loans for my daughter when she goes to college, especially, if the current administration wins and they stay and Harris wins, I would do that because there's a chance that a year or two from now or 3 years from now or whatever the re-election comes, that they're going to announce, hey, we're going to take care of what, I mean, I feel like an idiot saying that, but holy shit. I mean, what about the person? I don't know if you saw, did you see that video, Daniel, with Elizabeth
where the
Warren?
Guy confronts her, yeah.
And how pissed off, and she didn't even know what to say. He's like, I paid it off. How come I'm not getting that money back?
I'm in the same boat. I mean, I took about a very small loan after I broke my ankle. But nobody gets anything of that back, and nobody feels sorry for you, so that's okay. But yeah, it's unfortunately that's the world we live in. It is literally divide and conquer. So you pick the most social to pit society against one another like that. I mean, nobody in their right mind would say you should be okay with us treating this group better than the new group. That's not allowed on any other basis with race or anything like that. That's why they ignite it with all that kind of stuff. It's crazy, but you're right. That is a big part of the momentum because even with, I don't know if you caught any of Donald Trump and Musk's talk. Yes, I was listening to some of it.
Did you see all the places that came out and just immediately all?
Oh, of course, yeah.
Every single one of them destroyed it, and it was what, didn't it get a billion hits or something between everybody?
That's what Musk says,
stuff like that. And
but the wild thing is, and I credit Musk for saying, and I'm not all the way through it yet, but he said, most people don't understand inflation is caused by excess government spending, and they were talking about that, and Trump seemed to agree in all that. And don't get me wrong, I think his policies are better for the economy than his opponent. However, just like, Reagan is arguably the best and most popular Republican for the last pick your time frame. They're all terrible when it comes to debt. Reagan blew up the deficit and debt. Trump did too. That's what causes inflation. That's not going down.
No.
And what's scary is that during your periods of inflation, you need asset prices. And that's why you want to remain in stocks, even when you have these scary pullbacks and situations, because you have all this money chasing the same amount or less amount of goods. And it's just inflationary. And I get what Trump is trying to say, but we're not just Trump is the greatest here. I mean, we think independently. And
he can't lower the deficit and say, hey, we're not going to tax
exactly.
tips, and we're
so
not going
that's
to.
the point.
We're going to lower interest rates and stuff like that.
They're making your point on saying they're just going to make promises and promises and promises, and that's momentum because that's forward looking. And hey, deficits don't matter until there's World War III and we lose. Deficits don't matter, and I hate that, but that's the reality we live in.
Yeah, as long as the dollar is the reserve currency, which it is, and it will be through our lifetimes. Because if it's not, you got bigger problems, much bigger problems. But listen, I think Daniel and I don't mean to speak for you, Daniel, but I feel the same way you do. Is I'm concerned. I still think the market has a lot of momentum going into the end of the year. I think there's great companies that are doing fantastic. They're using AI. There's a clear advantage. You could see some of the companies that are doing very, very good and some of the ones that aren't. And it's clear, like McDonald's and Nike that haven't done well. Yet you look at some of these big technology companies and you see a separation among the big technology companies where Amazon pulled back, but you see a lot of momentum. Even, they're starting to really get momentum with the chips that they're developing with Amazon. You're looking at Meta really kicking ass, which is not an expensive stock at all, but yet Tesla's really starting to fall again. So, you've seen that separation. It's going to be, I say this a lot and I feel like we say it and it doesn't happen, but it is going to be a stock picker's market. There's names, and we saw during this earnings season, this is the most volatile earnings season I've seen in a very, very long time. I mean, I can't tell you how many companies I looked at. I said, holy shit, they're down 30%. At good companies. I'm not talking about small caps that could be volatile, that were up 200% and then fall 30% and, weaker earnings or they warned. I mean, you saw really a lot of big names fall 10, 15%. And even the ones that beat, you didn't see this massive move. You saw like a 3, 5, 7% move and then a little bit of a pullback, which shows that, we're valued pretty high here. But, this year going into the election, it still looks pretty strong based on the numbers, and we evaluate all the time. Again, that could change in a week from now or 2 weeks from now. The Fed come out and say, hey, we're not touching rates. I mean, again, you want to reevaluate. You have to be able to change your mind. It's some politics, so you could change your mind. I mean, you got to adapt to the markets. You can't just be like, I'm buying gold no matter what. I'm buying gold no matter what. You did that for 15 years. I got your ass handed to you.
But now it's at an all-time high.
Yeah, it's at an all-time high, but it's not even up that much. I'm not saying, and we're bullish on gold. We'll talk about that in a minute. But still, but going into next year, you're going to have to be very, very careful. But, there's still a lot of momentum in stocks, a lot of cash on the sidelines that come into this market. So, just be careful. We'll try to navigate through our portfolio, but it is interesting. And one company we talked about that has been hammered that went up 20% was Starbucks.
Yeah.
Starbucks up 20%. This is amazing news. Okay. This is after the CEO, new CEO, which is Chipotle CEO, Brian Niccol, decided to leave Chipotle, and that stock got hammered while Starbucks went through the roof. And I've been bearish on Chipotle, and this is last quarter. And I'm just going to play something because we always talk about our losers. But listen to this. But I think Chipotle's a good short. So, you can track me, whatever. I wouldn't short directly. These things that go through the roof and crush you. But maybe buying some puts on it, going out like 3-6 months. I think the next quarter, they're going to have a bad quarter in this thing. I think this thing's going to top out around here, so we'll see.
Well, Frank, they're listening to you. Markets are coming back. Chipotle's up 5% now, so you get a fresh high to short it from it.
And that was right after earnings, right? And and they announced a big buyback and everything. And just to go into a little bit more of the thesis there is I saw a quarter that wasn't as good as everybody said. And everyone was like, wow, they're going up tremendously and this looks good. And I was like, it wasn't as good as I thought. When I look at this company's raising prices tremendously. They just raise it again. They don't have the pricing power. If you look at some of the stores, they're not as crowded as they used to be, and the service has not been good. You can go online and track that stuff, right? Not only that, when they said they're going to open up 300 new stores this year, it was a red flag to me. 300 new stores. They were opening up on average 150 store openings like the last 4 years. Why so many? This is what almost every company does in the retail industry that has a growing business. When you get to the top of the trend, it's the easiest way to increase sales, but it winds up kicking your ass. Why? Because Chipotle already mapped out the best places to open up their stores. They have a great return on investment. Now they're going to locations that are like secondary locations just to open up these stores. Again, this happens with Macy's, this happens with Lowe's, it happens with almost every single retail. They start opening up stores and then they're going to wind up closing them. To be that aggressive tells me that growth is going to slow. It's a company trading at 50 times forward earnings. Again, from someone who loves this place that actually doesn't eat there as much because it's more expensive now. But I could tell you what happens is you know, people might say, well, Frank, you're lucky. And this is about $62 a share, $63 a share. That was when they last reported in April when we came out with that and whatever it is now, 50, 51, whatever it is. The bigger point here is when I look at Nickel leaving, and he's one of the greatest CEOs ever. He made $22.5 million last year.
Nice.
Right? Great. But 95% of that was tied to stock awards and bonuses. Okay. Those are triggered when the stock goes higher, which happens when the company grows. Leaving Chipotle tells me Nichols believes that company, that massive growth trend is about to slow, just like every company in the world goes through eventually. Microsoft went through 10 years after growing tremendously, and then they got into cloud and hired the right CEO, and then holy shit, this thing went through the roof. Why else would you leave to go to Starbucks, which is not going to be the best job? You went from selling pretty much the best fast food that people loved to coffee, which is the most competitive industry in food and beverage ever. Everybody has coffee. You could walk down a block and 4 different places serve coffee. McDonald's serve coffee. Dunkin' Donuts, all these places serve coffee. It's going to be very, very hard to win back those customers because I go to Starbucks, people love their coffee. And they really fucked up Starbucks because their online system wasn't working. People go there and say, okay, I ordered through the online system. Here it is. I want to pick up my coffee. And it wasn't ready. And you were there at 10:50. You're late to work. You don't mess with people's coffee in the morning. People go crazy. They're grumpy. It's already, they're stressed out because they wake up, they got to get to work. And now you're adding more time. They got to rush to work. Now, what did those people do? They went and left, and now they're happy getting their coffee someplace else. You know how difficult it is going to be to win that customer back to say, Starbucks is back. It's back. And now you could pay a little bit more money for your coffee again. It's an incredibly hard thing to do to get customers that were pissed off that have a new product that they went to, that they like now, that they're used to, because you messed up as a business to go back there. And I just went to Starbucks this morning because my kids started school today. Same thing. It was jammed. It was packed. It wasn't fast. He's got a lot to fix up. He's a great CEO. To me, this is a sell Chipotle event. It's down 20% since then. I think they're going to have more trouble. However, Starbucks, I understand the upgrades. I wouldn't be buying up 20% here because it's not a quick fix. I agree. I think he does deserve the 20% premium. I think you missed that. But I don't know. Daniel, what do you think? I know you have some information about that guy too that you hear about.
Yeah, I am. I'm excited just to start following Starbucks. What I want to see is if they do a kind of a kitchen sink quarter. If you're a new CEO, you come in a lot of times and you say, hey, man, this is terrible. And you just lower guidance, lower expectations, clean house, essentially. Remember Musk walking in with that beautiful, yeah, it is. But Musk did it best when he walked in with the literal kitchen sink in the Twitter.
Yeah, but a new CEO hire after after the restructuring, right? After the other CEO has done terrible. It's, rightly so. Put all the crap into the quarter. It's not going to be seen as your fault. Get it out of the way. Now your expectations are much lower. Analysts are going to lower estimates. It just makes sense to do that. Like next quarter to come out with a very, very crappy quarter because it's not under you. And they call out the kitchen sink because you're throwing everything out there and saying, okay, that's it. And now the growth starts. And you could see, maybe you'll see Starbucks pull back on that announcement. I don't know where it is today right now, but up 20% on that news when this is a yearly, at least a 12-month before you see anything happening off the bat. But, again, I understand why it's up. I don't know if I'd buy it here.
Yeah. I'm not buying it yet. I am. If I bought it right now, I would buy a half a position, or I would plan on buying more. If you're going to buy it now, you have to buy it, in my opinion, you have to be willing to buy more at a higher or lower price. And here's why. I was talking to a gentleman who used to be a bigwig for KFC, menu development, stuff like that. He's got a PhD in food and all kinds of stuff. He's a very, very intelligent guy and a great guy to talk to. And he was talking to me last night about this change between Starbucks and Chipotle. And he said that this CEO is like a god in the food industry, and his track record at turning around Pizza Hut and Taco Bell and then Chipotle.
Separating the China business, yep.
Yeah, he is absolutely like hands down the best. And this is coming from a company insider or an industry insider. And I said, hey, if you dumb it down to my level, I said, would you bet on this guy? Because essentially, when we're looking for good investments, we're betting on good management teams or good products or whatever. Bet the jockey, not the horse type deal, anything. And he told me, he said, "Oh, absolutely." He says, I would absolutely back that guy. He is that good." And what was interesting is my contact was telling me, and he said, if you go into Starbucks, it's shit. He said the food is absolutely terrible. And these guys are foodies. And I say foodie, meaning they're always looking at quality. And he's a hilarious guy. He's impossible to go out to eat with because he nitpicks everything and he tells you, oh, you can't eat here because of their processes and you can't do this. And he starts telling you all these stories and it disgusts you. You don't even want to hear it. But what he was saying is he thinks that he will go in and because like you said, everybody sells coffee. It's one of the most competitive markets there is. And they're a high price coffee. He said he thinks they're going to come up with some kind of a food not ingredient, excuse me, but a sandwich or a croissant or a breakfast, but some go-to where people will say, hey, I'll go to Starbucks for that and it won't be a coffee. Coffee will be, and he said he's gonna improve the quality and improve the supply chains. Like I said, if you buy it now, I think it's too early because like I said, you missed the initial pop, but I can't wait to actually listen to this guy on conference calls, knowing I'm one person away from somebody that just thinks the world of him. He's an industry mover and shaker. So I definitely think this is worth everybody's time. But yeah, I wouldn't just buy it blindly here because you could have all kinds of, what if he makes one wrong hire and that takes 6 months to replace, like you said. But no doubt with the stock beaten up, guarantee he's got a sweet option package and he's looking just like Chipotle.
Oh yeah. And a lot's going to be, and again, that 20%, who was it trying that invested in it and said, activist investor and said, okay, hey, we're happy about this, Nelson Peltz, and they sold it immediately on a 20% move.
Hey,
right. So they sold
quick
it immediately.
20.
So that was a quick 20%. Again, it's priced in and I get it. I think this guy's fantastic, but I don't think I can't say that I remember. I won't say any time. I don't remember a CEO, and I'm not gonna say great CEO because most CEOs are great when their stocks are all-time high. When what this guy has done, I think they said he's ranked 8th in terms of since he's taken over Chipotle. There's only 8 stocks in the whole S&P 500 that had bigger moves, higher moves.
Well, I think the stock went up like 700% or something
800%, I think, yeah, something like that.
Tenure.
And there's only like 7 stocks that outperformed that. But when have you seen a CEO leave when their company was at the top of their game? It's got to tell you something that's going on underneath the hood with Chipotle. Where again, his salary, which is massive, is tied to performance. Again, I just the last quarter,
Frank, he conquered. He wants to go do another. He wants another challenge.
Yeah, I know. I mean, he could have left this so many other times. But just right now, in the timing of this, and then and also be careful with the stock splits, right? Because look, we talk about losers all the time. We really do, and because you're going to learn a lot more from your losers than you do for your winners. And I got a lot of emails saying, "Well, Frank, the stock split is there," and again, it went. This is after the quarter, and I think it went to like 67 or something after 62, before coming down to 50, but. Be careful because stock splits were automatic over the past 6 months. It was an automatic, right? Every company. Now you have also Supermicro, who came out and announced a big stock split, and their stock got crushed, right? So it's not the automatic where, these guys got on stock split. When it does, it's great. Again, nothing happens fundamentally, but the stock does normally go higher. That's all you should care about. It doesn't matter what people explain. I'm a fundamental analyst. I could tell you, nothing changes. Nothing changes. Okay, it's the same exact value. You're increasing shares, or if you're lowering the stock price, you increase stock price, you reverse. It's the same exact value. But when you're lowering a stock price, maybe more people get into it. Again, it makes it more marketing. When you have $1,000 stock price compared to it's $50 or $100, you get more people in it, whatever. But for whatever reason, when you announce those splits, usually stocks go higher. But the last two that announced, you haven't seen that. So don't make it a given where every stock that's reporting, if they're over $1,000 or whatever, and they're going to announce stock split, it was almost like the guarantee that it was going to go a lot higher on that news. But we've seen 2 stocks now going lower on that news. So that was interesting to me. But overall, look, I think I wouldn't be buying Chipotle here. I don't know why he would leave that company unless he thought it was slower growth. And I think he deserves a 20% premium, but I wouldn't be buying it more than that. I just don't think it's very expensive here. It's trading. It's very expensive. And what he's going to do is not going to be easy to win back customers. It's not going to be easy. And it's not as easy as, he's going to spin off China. Any idiot could come in and spin off China. Any idiot could do that. You don't need a greatest CEO to do that. He's like, look what that's very easy to do. The other CEO could do that. And I know, whatever the owner's name is, I forgot, Schultz was fantastic, amazing. Who had to come back another time because he hired the wrong CEO and just right-sized the business. But, he could have did that himself. So it's a lot more than just spinning off China, which China is an absolute disaster. I'll cover that tomorrow. But I do want to cover on last thing is gold and Bitcoin. I mean, gold's at new highs. We saw Bitcoin go higher. It's back over 60,000 again. We were really.
Well, it was.
Last
I
week,
think it's 59 now because the damn thing moves all the time.
Yeah.
You can never be accurate with Bitcoin.
Oh, yeah. I mean, it was 6 down when we started. Now it's 59. I think the market was pulling back a little bit as we were doing this, right? I don't know where the market is now, so I could look. But it is amazing that you just see these fluctuations, not in the market, but also in Bitcoin. So the market's actually holding in a little bit. So all three of them are up. The S&P, Dow Jones, NASDAQ. They did pull back a little bit. They're all up a little bit. The Russell's down a little. But, with Bitcoin, again, very, very, very positive. We talked about the catalyst going forward. I just think it's a steal at these levels. I think it's going to be 100 grand by the end of the year and go a lot higher in 2025. There's just, there's so many secular catalysts that are coming and I think it's going to result in so many more names of those top 100 cryptos that are really good names have gotten crushed. We saw Solana get crushed. We actually bought that on a pullback in our newsletter. It's going to open up the opportunity to a lot of more money flowing into like the next tier, the next good tier. Okay. Not meme stocks and stuff like that. You can go crazy if you want. I would never tell you not to buy them because I've seen some of them go up 100,000%, literally 100,000% within 6 months. I'm not going to tell you not to buy them. It's crazy. Just assume the money you're putting in, you're absolutely going to lose. But these are good cryptos, which are software companies that are really good and really strong. And I think you're going to see money flow into them, and they're going to do very, very well going forward. So, and even Ethereum is still down a lot from its high, and I think that's a good buy here as well. So it's very, very bullish on crypto. It's going to be volatile, but overall, the secular catalyst, the money coming in from institutions, trillions going to have easy access for the first time. The halving, where you reduce supply growth, just everything's really, really lining up for this thing to go higher, much higher over the next 6 to 12 months. And now we're seeing really gold hit new highs as well, right?
Yeah. And the cool thing about gold is it's like stealth. I mean, it's not getting a whole lot of attention. And I don't think you've been throwing out the $3,000 mark for a while per ounce. And I just think that that's going to happen. And then I don't know if it takes 3,000, but at some point, headlines, X, social media will get on this gold bandwagon, just like you see the crypto headlines and all that kind of thing. And I think that that's absolutely great. I definitely, like I said, not to reiterate this too much, but the world is plenty big enough for both. You have, up until recently, I don't know about the last month, but you've had basically record or near record amount of gold buying by central banks. That's not a coincidence as debts run out of control. Bitcoin has bounced back amazingly from over 60 to under 50. You know why it did that? It's because I recommended it in Dollar Stock Club. So we went from up 10% to down 20% to now basically down 5%. But the rebound effect that it's been in, did you see two quick things here? Number one, Marathon Digital mining company, publicly traded Bitcoin mining company, they're going to stamp, or they have begun to stamp, their Bitcoin mines with made in the USA.
Nice.
I thought that was kind of funny.
Yep.
And then BlackRock, I don't remember if is it Eric Balchunas? I always butcher his name, but he's a great ETF contact analyst for Bloomberg. But he put up a great chart on social media showing BlackRock is on pace to become the largest Bitcoin holder relatively soon. I think it's throughout the end of the year or whatever, because when you look at the inflows,
no outflows when
not
it
any
crashed.
meaningful outflows. Yeah, it was 0.3.
Yeah, very little.
It was a rounding error.
Yeah, so
which is impressive.
Yeah, it is.
The overall totals, when you're looking at how much money is flown into Bitcoin ETFs, it's over 20 billion. To put that into perspective, the next largest ETF inflows of new ones are like $1 billion. I mean, it's not even close. So to your point, and it does seem a little fuckery here, Frank, that Bitcoin sells off every single morning when the market opens, it seems like. No matter what it's trading for, as soon as the market's open at 9:30 Eastern, Bitcoin goes down for a little bit and then has rallied in the past. I don't have a tinfoil hat on, but it's pretty funny to notice that, Frank.
Yeah, and I have the actual stats up here because one is, I'm going to tell you something about Bitcoin, because you said no one's near $1 billion, which if you go past the second one, then you're right. But when you look at BlackRock is at 20 billion. Okay, Grayscale is minus 18 billion because they transferred that money out into the ETF, right? So when you look at the inflow, outflows, and stuff like that, but you're looking at 20 billion for BlackRock. You know what Fidelity is? Almost 10 billion.
Yeah, I meant other ETFs launched.
Yeah.
So you have all this money going into Bitcoin ETFs and not like the other ETFs. They're like, they don't have any near the money.
Oh yeah.
Like,
all the other ones.
Yeah. I'm sorry if I missed good.
No, but if you, you're right. But if you look at it, because there's a few of them. You have ARK, you have Bitwise, you have
and
Galaxy.
Did you see the headline on Saylor of MicroStrategy said he has personally $1 billion in Bitcoin?
Does he?
I read that headline.
That guy. The conviction that he has when he speaks and what he's done.
Forget the company holdings, his personal holdings.
And not only that, the amount that he is up, and that so many people, I don't know why the gold bugs shit on that guy, because you look like an asshole when you do, because you've been telling us to recommend gold. Gold, the dollar's going to disappear, all this shit for gold for freaking 25, 30 years. You can go back in the 70s and take something from these guys, and it's saying the same thing today. And I know gold's at all-time high, but you should not be attacking a guy since 2020 that is up. Holy shit. I mean, tremendous amount with Bitcoin. The guy has been right as could be, and he's not wavering. I mean, this was the message from day one, from after 1 year, after 3 years. This is August 2020 when he started doing this. The same exact thing that he's been doing and how he's benefited. And I don't know what, listen, you could attack him just like you attack, who's the girl from ARK? Kathy Wood. When things, remember they were comparing Buffett, performance was a million times better than Buffett, and then everything crashed and everyone said, oh, look, you ripped them apart when it crashed. When do you get the chance to rip this guy apart? I mean, even at 60,000, even at 50,000, even at 45,000, he's right. So, choose someone else. I don't understand why you have to attack him and why you just don't go after, again, you could own both of these, which we do in our portfolios. And speaking of that, I'm looking at Newmont. Newmont hit a 52-week high and it's just off of it. But if you look at Newmont, which is surprising when you go back 5 years, it's not an all-time high, even though gold is at all-time high. And a lot of that is because inflation is absolutely through the roof. And, this is a stock that was $80 not long ago. So when you go to the all-time high here, which take a little second to load here on my computer, but it was around $80 for the all-time high. And even when you look at a company like Barrick has come down. Now, people are like, okay, Frank, I'm in junior miners, and we haven't recommended junior miners for a very long time. We used to help out a lot of financings and stuff because we got good deals because I have great contacts. I'm making a trip to Vancouver in October. I'm going to meet with a lot of people. I haven't been there since before COVID. I think there's a tremendous opportunity in junior miners. You have to do a lot of research on. These are companies I follow for over 10 years. I know who's bullshitting and who's not. I know who's for real. I know who's busting their ass during tough times where they were adding assets to dirt cheap. The next $500 move in gold, which is at 3,000, which is inevitable, that's where you're going to see a lot of junior miners go higher. You're going to see a lot of stocks start going higher because now you're going to see the margins go higher. What happened with gold is, yes, it went to 2,500, but the inflation in that industry was insane. And when you're linked to the commodity, you don't have pricing power. So if you're Chipotle and your costs go up, you could pass them on to the consumer and charge more. I used to charge $6 and change for a bowl, and now by the time you leave, it's like $15 and change if you get a soda or a drink. So you could raise prices. You're linked to the commodity, and although the commodity price went up and we're 2,500 all-time high, still the margins are not insanely great where they were producing, what was it, Dan? You know these numbers. What, $800-900 were the production costs for these guys.
Yeah,
so at 1,700, you're like, holy shit, but when we went 2,500, their cost of what? They went up more than the price of the commodity. So the next 500% now, it's kind of like the scalability. It's like, here are your costs, but once you get to that cost, everything else is going to be gravy, right? So you have these fixed costs. I feel like their costs are fixed. Inflation is coming down. Now the next 500% move, I think you're going to see a lot of these companies, especially Newmont and the producers, are going to generate money. As they generate more money, what are they going to do? They're going to want to produce more gold. And to do that, they significantly underdeveloped over the past 15 years. There's been like maybe 1 or 2 major discoveries when it comes to gold. Now they're going to look at the junior miners who basically put a stake in it. They have, hey, this is really great, but it takes a lot of money to actually develop these things. And it's been tough in the finance market. Now you're starting to see it open up a little bit. The companies with high-grade gold projects, the companies that have a lot of gold in terms of the ground, the balance sheet, as a Newmont's are going higher, as a gold, the majors are going higher, right? You have Barrick going higher now. As they go higher, that's what they're going to do. They purchase the junior miners. They're going to have purchasing power. They're going to have access to the capital markets. They're doing great. A lot of these are paying dividends. And then they're going to be able to dictate the prices because the junior miners were struggling. Again, it's expensive for them to drill, right? To develop this asset. And now you're going to see a lot. I think we just saw, I think it was Goldfield or something, just acquired another company for over $1 billion. You're going to see a lot of M&A activity. You're going to see a lot of recommendations in the junior mining space coming out in our newsletters. I'm even thinking of starting a newsletter like that. I might get somebody else to do it because I think there's an opportunity over the next 2 to 3 years, but you're going to generate money over the next 6 months in junior mining stocks, even in silver, covering all kinds of energy, even uranium and stuff like that, because, this is their time right now. I just can't see prices not going higher. And that next 500% move in gold, I think that's when you're going to see the juniors.
$500 move.
$500 move is you're going to see the next 2x to 3x to 5. That's what you invest in junior miners for. And you haven't seen that even during this bull market of gold going higher. And people are frustrating, but you're going to see, I think, a lot of money come into this market with everything else really expensive right now. It's going to provide a good opportunity. And you haven't heard me say that in a while when it comes to junior mining stocks. A long while.
That's right.
So, again, it's a good opportunity.
Buy gold and Bitcoin.
Yeah, it really is a good opportunity for gold and Bitcoin, and that's two areas. And again, just be careful here. It is a crazy market. It's really nuts. But there are lots of opportunities that we're finding. Some names have gotten absolutely killed. Tomorrow's podcast, again, Dana's going to be on vacation again, and that's so cool that you're going to see, decent stuff. That's awesome. But I'm going to break down China. Things are really, really, really bad. I know that's what you think, but wait till you hear the stats. I've been doing a lot of research on this. And that's one of the only negatives I see for gold, because it could be a possibility that China starts selling their gold. They have a funding crisis going on. They purchased a ton of gold, central banks. Again, everyone's shouting, central banks are buying, China's buying, everybody's buying. Here's the facts. They bought for 18 straight months. They haven't bought for the last 3 months. They stopped buying. Okay, why is that? They have a funding crisis. Things are not going good. And wait till you hear the stats that I'm going to show you. And a lot of this stuff you're not going to see in a lot of places. It's very difficult to find. We got good people, boots on the ground in China that send us a lot of great information. Again, it's hard to get information sometimes from there, because if you're from China and you report it, you can go to jail. Wait till you hear some of the shit. I mean, no one even knows China's one of the large steel companies just declared bankruptcy, right? Nobody even knows that, right? Well, it's not even anywhere. It's not even a headline. It's 18,000 workers, 20 billion annual sales just now, right? Just past couple of days, right? Filed for bankruptcy. Nobody knows that. Okay, this is a company that's been on a top 500 enterprise in China, that list for the past 19 years. Okay, it's much more than just real estate. It's really, really bad there, and how to play it. But that's my only negative possibly on gold. Going forward, if they decide to sell, it'll be a very negative headline. But overall, how do you play the negativity in China? Because we still have a lot of companies that have exposure there, but be very, very careful. And that's why I say it's going to be a stock picker's market going forward, because there's just a lot going on around the world. I mean, even inflation is starting to come down. You see the surprise inflation in the UK came down too. So, you're going to have to follow a lot of this stuff, and you'll definitely have an edge in buying the right companies, because, during bear markets, everything sells off. And when you have this pullback, it creates a nice buying opportunity like it just did, especially in NVIDIA. I mean, how much has NVIDIA come down and come, it's come back tremendously, right?
Yeah, it was down. It had to be down around or a little more than 20% from its highs.
Yeah, it did.
After it split, it was over $120, I feel like, and then it went under 100, and now it's rallying back. So, well, I don't know what it is today, but
yeah. Wow. I don't know if it's just CNBC, but yeah, it's coming up a little bit slow. But it was at 140 and now it's 116.
Oh, wow. 140.
So it's still down off its highs, right? So pretty much. But, I think did it fall below 100? Yeah, I think it just fell below 100 briefly. 98. And now it's up to 116. It's 98 a week ago. Right? So pretty, just a nice 16, 17% move off of its highs. Sometimes, a company like this just gives you an opportunity to really buy it at a discount. But again, there's a lot of names out there that shouldn't be selling off, that reported good earnings, that have managed their companies well. They already cut their expenses. They're seeing margins stable. And that's another thing. PPI came in lighter than expected, which is good for inflation. But that also means that companies are losing their pricing power. So that could hurt margins. And that's what you want to try to avoid, because that's what happened with Supermicro. I mean, their numbers, did you see the numbers, Supermicro? Their numbers are really good. Their revenue numbers, their margins were atrocious. And that's why Dell has crashed too, because they're afraid. I don't know if they reported yet. Did Dell report yet? I think they report soon, but numbers have been coming down. But I mean, Dell has gotten annihilated. I mean, that was a stock. Everyone's like, oh my God, Dell's like on fire right now. I mean, it's just, to see
Briefing
some of these
has
stocks.
Them as into this month.
179 it was. It's $100.
Oof.
Dell, right? It's $100. And that pullback has been what? A couple months. It was 175 briefly, but still it was, a month ago it was 145. It fell to 100, right? So, margins are a big deal. And that PPI report, again, although it's great for inflation, we say, well, yeah, everything's good. Be careful, because it's not really great for equities when you see that. Okay. And we want to be there for you guys. If the market does come down, how to participate, what to stay out of, how to protect your assets, because the greatest investors in the world love when the market comes down. Okay, they love market crashes. It allows you to buy a lot of assets at dirt cheap prices. Okay, but you have to have money on the sidelines, and you can't be stupid and just get into the wild stuff. And that's what we're trying to say. Listen, it's going to be pretty bullish. for the rest of this year, but going into next year, it's going to be difficult, and you want to be able to pick and choose, and it's going to give you a lot of opportunities if you're smart, and hopefully we can help you out with that. If I can help you out, I know Daniel will be there for you, as always. So when are you leaving tomorrow, Daniel?
Yep, tomorrow morning. So I will miss the best day of the week on Thursdays for Wall Street Unplugged.
All right.
Premium.
Since you take care of that portfolio, I'm going to recommend like 25 stocks tomorrow.
Yeah, there you go.
We'll see. A lot of research. I don't know if I recommend any type. That's Wall Street Unplugged Premium, guys. That's a premium service where we recommend stocks, and they go into a $1 stock club portfolio. And yeah, we love that portfolio. It's been doing pretty good. Volatile lately, but it's been doing pretty good. So guys, questions, comments, feel free to email me at frankcurzioresearch.com. Daniel
at curzioresearch.com.
All right, guys, that's it for us. And I will be seeing you tomorrow, Wall Street Unplugged Premium. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Could the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.